Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Monday, February the 8th, 2010. Well, quite an important day for this market. A doji type candle, which means indecision in the market, and that means that neither the buyers nor the sellers have made any net bullish nor bearish progress on the day, not what we want to see when the market's attempting to rally, especially above a resistance area. A lot of indecision in this market though. Now, importantly though, the market hasn't changed trend to the downside. The trend remains up. We have a previous series of higher highs and higher lows. Today's candle was a lower high but a higher low, and in bar chart terms that's an inside day, which also means indecision and doesn't support the uptrend because the market has failed to take out the previous high. Interestingly, the market is interacting with this area of resistance that we highlighted around 80.4 and has failed to close up above there. For the second day in a row, the market's tested that area, tried to trade up beyond that area, and the sellers have come in and closed the market down below the 80.4 level. Having said that, though, the market has only just closed down below there. So it wasn't a substantial sell-off, nor was it the previous day. The market closed roughly within the same area. Very important for us to watch the low of the current candle for a potential change of trend, and interestingly the Kijun Sen here has turned flat, and when that turns flat the market is trying to find equilibrium, and there's every possibility that the market will trace back towards this Kijun Sen in an attempt to find that equilibrium. If the market does sell off, obviously the 80 area is important for a potential level of strong support, but also the 79.50 region with where we saw previous resistance, so there is potential for support there, and that coincides roughly with where the Tenkan Sen is. When the Tenkan Sen is pointing up fairly sharply, it's representing strong upside momentum, and quite often the market can pull back quickly to find support around there. So if the market does pull back to around that region, we need to read the short-term dynamics, and it may offer a potential opportunity to go long if the short-term dynamics are positive, if bullishness starts coming into the market. Having said that though, there is the barrier to the top side around the 80 and the 80.4 level if the market does trade up. So the market will need to test those areas and close above those areas for any further price appreciation. Down below there we have support around the 78 region, and then certainly down below here to the cloud around the 77 region. Now the market is still trading up above the cloud of the Kumo, so we have an overall positive bias in the market. It is still strongly trading up above the Kijun Sen and Tenkan Sen, and the Tenkan Sen is above the Kijun Sen, which means that the market is bullish in all of the three time frames, but we do have some doubt about the viability of the trend that the market's in the first time frame and the fast time frame. So keep a close eye on the short-term dynamics and the low of the current candle.